Okay, so today's lesson is going to be a quick review on lesson 3 on the parts that were confusing and unclear for my brother. So I've already went through his homework and now he's just going to explain to me what he found confusing. So take it away.
Okay, so what I found confusing was, well, taking these concepts from the lesson and these key levels and concepts and applying them in paper trades because I found that, learning how to spot them wasn't very difficult, although it is hard to get it on a level where it's habitual and intuitive. I am still like struggling with being able to apply them and recognize what they indicate during my trading, my
Okay, no
paper
problem.
trading.
Yeah, so I think maybe the homework was a bit unclear on my part, specifically the one I asked you to do the demo trades. That was the one you weren't able to do because you didn't understand like how to use the concept and apply them to demo trade. It was mainly I
Yeah.
wasn't like looking for the perfect thing. I was just trying to see your ability, just anything like any demo trades. It doesn't really matter, just to train your eyes, etc. But we're gonna go through them again. So right here, I have a chart. Okay, let me write
Yeah.
something down for you. So usually we use the higher time frame to lower time frame. Okay, so that
Yeah.
is, let's say for the higher time frame, let's say use the daily chart, and then the lower time frame would be the 1 hour, or you can even say the middle time frame to lower time frame. So the 1 hour chart is the middle time frame, and then from the 1 hour is to the 5 minute. Okay,
Yeah.
and then another higher time frame would be, for example, your 4 hour key levels, and then from them you go to the 15-minute key levels, and then from them you look for the 1 minute entry. So the higher time frame, let's make this bigger. Okay, the higher time frame is your bias, and the higher time frame key levels, you have them for like a narrative or direction.
Yeah.
Once you go into your higher time frame, once the price moves into the key level, let's say you have a daily fair value gap, once price moves into it, you look for a middle time frame confirmation. So a 1 hour confirming the daily. Okay?
Yeah.
And then once you're in the 1 hour, once the 1 hour has confirmed the daily, that's when you can move into your 5 minute and look for an entry. Same
Yeah.
applies for the 4 hour and 50 minute and 1 minute. Exactly same thing. And there's more advanced concepts, but this is literally the basics of the basics. Okay.
Yeah.
Sometimes you can go from the daily to the 4 hour, depending on the context and if you want to be more precise, etc. But usually this is how it's going to be. Okay.
Yeah.
So what else was it? We mainly did fair value gaps, liquidity sweeps, etc. Like manipulation, etc. So let me
Yeah.
give you an example right here. Let's say I'm coming in this day right here. Okay, I'm gonna
Yeah.
trade here or this trade right here, and I have a daily fair value gap. So this has a lot to do with time. So the reason you maybe couldn't do a demo trade because you don't know even the times yet. I was just trying to test you. But let's say
Yeah.
here you have a daily fair value gap. Okay,
Yeah.
now let's move into the 1 hour. So you're coming in here. You're right here. This is where you are. The price
Yeah.
hasn't moved into your 1 hour key level yet. But let's say you're here. You're aware of the daily key level. I meant. And then you watch the 1 hour. Once the 1 hour taps into it, you look for a confirmation. Okay? So, for
Yeah.
example, the confirmation could have been these 1 hour fair value gaps right here. Okay?
Yeah.
Obviously, the confirmation in this scenario would have been earlier, depending on how you use the key levels and what you use to confirm them. But if we're going to stick to fair value gaps, which are the simplest thing, the confirmation would have been in here. Okay? So now this 1 hour key level is strong. It's a strong key level. Okay?
Yeah.
Because it's confirmed by the daily. Okay, so this 1 hour confirms the daily, confirms that we want to move up, and the 1 hour becomes a strong fair value gap. Because look, you can see, for example, in here, there are many 1 hour fair value gaps everywhere, but none of
Yeah.
these really matter because they're not in context of the higher time frame. So not a single fair value gap in here is in context of the daily. Only this one. So it's
Yeah.
you're layering the probabilities, if that's what you want to call it. So now we've done
Yeah.
the daily. The daily, the 1 hour confirmed the daily, and now we have a 1 hour fair value gap. Now let's say you come in here. Okay, when we move in to the 1 hour fair value gap in here, for example, we're right here. In here we moved in, but the time was not supporting. So there's another concept called time. We're gonna go through this on lesson 4. So 9:30 is the market open. That's where you want to look for a trade, for example. So all of this doesn't
Mm.
really matter because the time doesn't support it. Do you understand?
Yeah.
But
Yeah.
now in here, you're in the 1 hour key level, 1 hour fair value gap right here. Price moves down to it, comes back up, leaves a 1 hour fair value gap, 5 minute fair value gap, and this is your entry confirmation right here. You enter here, you can put stops here, depending on how you want to use it. You can target a 1-to-1, you can target a 1-to-2, etc. So that's basically how you
Mm.
use it. That's how you apply them.
Yeah.
I know it
So
might
when
have
it
been fast, but
yeah,
this is the
but
basics of it.
when it comes to okay, you have a daily fair value gap, and what we're looking for is a 1 hour fair value gap to confirm the next one. So there's a lot of fair value gaps in between where it would confirm it. How do we know specifically like which one would be in context? Like how do I recognize that?
Because after the price has moved into the daily fair value gap, that's when you wait for a 1 hour fair value gap. And that 1 hour fair value gap would be in context.
So after it goes into the fair value gap,
After it goes
once
into the
in
daily
yeah,
fair value gap, okay? So as you can see here, we went in. This is the first time we tapped the daily fair value gap. Okay?
yeah,
Here's where it was created. This day we didn't tap into it. Here we tapped into the daily fair value gap.
yeah,
From here, we had to wait a long time. Someone would have used, for example, here as a confirmation, because here we have a 1 hour IFEG, but we're not going to be using that right now. That will come later on. We're only using simple fair value gaps right now. The 1 hour fair
yeah.
value gap that confirms this level is here, because this was the most recent fair value gap created after the
After
daily
the
tap.
entry.
After the daily
Yeah,
tap, yes, not the entry.
yeah.
So
No,
we
yeah,
we
like
we came
entry
in,
into the fair value gap.
yeah, and then we went back up. So we confirmed the daily.
Alright, yeah, that
Obviously, for me,
clarifies it a lot.
yeah. So for example, for me, let's say I came into this day, I will not wait for 1 hour because I trade a bit more advanced like strategy. So I would, for example, go into the 15 minute, confirm this, or even maybe the 5 minute, see what the 5 minute is doing on that specific day. We tap into it. So maybe I could have taken a trade in here. But if you want to be in context and stick to the like textbook, if that's what you want to call it, then this is
Yeah,
the textbook setup. This is where you want to wait for
yeah. And then from that 1 hour for value gap, we do the same thing on the 15 minute or in the 1 minute, right?
the 5 minute.
The 5 minute.
Yeah.
Yeah, so we look to for it to do the same pattern where it taps into the fair value gap and then it comes out and creates another fair value gap.
Yes. And now here
Ah,
comes
it's
the most
perfect.
important thing that we're going to go through in the next lesson. So maybe I should not have given you the demo trades to do now. I should have given it to you after the next lesson because in here, time, all of, like, for example, in here, let me show you. In here, we already tapped into the 5 minute, the 1 hour fair value gap right here. We tapped into it
Yeah,
and we already left a 5 minute fair value gap. But this was not during the session of the asset class. Do you understand?
yeah.
Because
No.
NASDAQ moves, okay, because NASDAQ, it, you want to watch for it at 9:30 New York time. So 9:30 is right here. Here's when the market opens, and here's where the most volume is injected into the markets for this asset class. So you don't want to pay attention to anything before that.
Ah, yeah.
Again, so let me give you an example of, for example, some trades I took. So I usually don't use the daily fair value gap because I don't need it. It's mainly in my beginning stages. That's when I used the daily and more of the higher time frame. And now, for example, I only use the 1 hour, 50 minute, and lower. Okay, sometimes the 4 hour
Yeah.
if I need to. So let me go to a day where I took a trade. So let's go Tuesday 9:30. So here's Tuesday. So let me show you how I use this. This is Monday right here. This is Tuesday.
Mm.
Okay. So let's go into it. We have a 1 hour fair value gap in here, and we have a liquidity sweep. So I'm looking at the most recent things that's happening in here. Okay.
Yeah.
I saw we moved up, we swept liquidity, and we went down. So we went up, manipulated all these highs. Okay. So this is where the manipulation and displacement comes down. We manipulated these
Yeah.
highs with a sharp fair value gap up and instantly sharp fair value gap down. So this right here,
Yeah.
so this is the manipulation and displacement concepts. So mainly I use the manipulation for this trade, and we had targets below. We had liquidity below here, and all of this, for example, you see right here, we have trendline liquidity that we can target easily. Okay,
Yeah.
so when I come to this day, right here, I didn't see any of this, obviously, because the market is still moving as I'm going. But we instantly
Yeah.
we manipulated these highs. We came up and instantly came down. We closed lower, so this shows me that we manipulated these highs and we didn't displace above them. Because if we displaced above them, we would come up, maybe come back down and respect this area, this whole area right here, and then go back up.
Yeah.
But we didn't. We instantly disrespected it and created a new fair value gap lower, showing me we want to go lower. In here, for example, I took a trade on the 1 minute because that's how I trade basically. I took a trade in here somewhere. Where was my trade? Around this area and stops above here.
Yeah.
This was an aggressive trade, but it's based on the context above it. So it's based on the 5 minute context and the 1 hour context.
Mm-hmm.
Even though we had a 1 hour fair value gap against us, like with experience, you will know sometimes which ones fail and which ones don't. We had more key levels below that I could have targeted. That's why I took this short.
Yeah.
Yes. Is there anything else confusing? Anything else you need help with? Something you don't understand?
Maybe you can talk a bit more about like for when I'm doing a paper trade, what is like the main indications that I should be looking out for? Like just simplify it a little bit because it still feels a bit complicated.
Okay, so if you're gonna take a paper trade,
Yeah.
or even in live trades, you want to see what's around you. Okay, so let's say we start on the
Yeah.
4 hour. Okay, let's
Yeah.
replay this. Let's go in here. Okay, so the four
Yeah.
hour right here, we have a 4 hour bearish fair value gap. Okay,
Yeah.
and we have a low right here. These are your
Yeah.
closest key levels on the 4 hour. So basically, you just want to mark the
Mhm.
closest key levels and possibly what happened before them. So before this 4 hour, we swept this high.
Yeah.
Okay,
So you find what's relevant, which is very close.
exactly,
Yeah.
exactly. The context. You want to see what we did. So before we made this 4 hour fair value gap, we swept the high. Okay,
Yeah.
and from the 4 hour fair value gap, we swept these lows. Okay, so nothing here is really decisive, telling us which side we want to go. So this is not telling me bullish. This is not telling me bearish. These key
Yeah.
levels right here. I'm in between two key levels. Let's go into the 1 hour,
Yeah.
for example. You do the same thing with the 1 hour. The 1 hour, recently I swept this low and we've swept this high. So we're just consolidating. So for example, for me, this would not have been a great trading day, or I would not have traded this because we're just consolidating. But I'm just
Yeah.
gonna give it to you as an example. Now on the 15 minute, we have almost nothing. We just have same sweep up here, same sweep up here. We have this fair value gap, but it's irrelevant because we've already swept the high of it. So the high that created the fair value gap has already been swept, so it's irrelevant. Okay,
Yeah.
let's go into the lower time frame even more. Yeah, as you can see, for example, in here, we're just consolidating between these levels. So Now, what you can do, let's say you're going to take a trade in here. Let's say this is the market open. It is actually 9:30 right here on a Wednesday. You would simply wait. So at the open 9:30, we swept this low. So once this confirms, once you get a fair value gap up, you could have taken a long, for example, target this high, but the risk to reward would not have been great in this example. And once we
Yeah.
got up to this high, we're going lower. So we manipulated the high and displaced lower. So this could be indication you want to go short. Okay, because we
Yeah.
have nothing major above it. Or if you want, you have the option to wait, because you have a 4-hour key level. From the 4-hour, we wait for a 15-minute confirmation, just like we mentioned before. So you can wait for a 15-minute fair value gap to form lower from this 4-hour. And then let's see, for example, what happened in here. We went back up. We swept another high. So again, look, right
Yeah.
here, we swept this high again. So from here again,
Yeah.
you can, this is a key level right here. You can wait and see, do we continue up above it, or do we displace? So we manipulated these highs and displaced lower with fair value gaps. This is showing us displacement. Again, this
Yeah.
here would be a short opportunity. But if you want to go again, follow the textbook, you wait for the 15-minute, and right here we formed a 15-minute fair value gap from the 4-hour. So this would be another indication. You can either take a short as soon as the 15-minute fair value gap forms, take a short to here, or you wait for a retest of the 15-minute fair value gap and go into the lower time frame even more. Okay?
Yeah.
For example, in here, it would have been better off for you to wait for the 1-minute confirmation, because we never got one. So we're showing you that that the key level is not holding. Okay?
Yeah.
Again, see, we went back up here.
Yeah.
So there are many different factors and many different things, but you basically want to see from the higher time frame. You want to go from the higher time frame, see what's closest to you, and then go to the lower time frame, see what's closest to you, what's happened recently, etc., etc. See where you can target some obvious areas of liquidity. For example, this one. This could have been my target for the day, even though we never hit it. Do you understand? But this was, for example, today I didn't trade this day, Wednesday, because it was I was expecting consolidation because of a red folder news event that was coming later on the day. But tomorrow, for
Yeah.
example, Thursday, I'm gonna be trading. I'm gonna be looking for the exact same shit. I just look for the recent key levels, how we react to them, etc., etc.
Yeah.
Let me stop this. So now, for
All
example,
right.
tomorrow at market open, you can come in. You can see, you can go into start with the 4-hour, see where your key levels are, the most recent ones again, mark them out, what happened before them, etc., and see how the price reacts within them. Okay,
Yeah.
that's how you use the
Yeah.
key levels. Basically, let me break it down for you very simply. Trading is key, high time frame, key levels, low time frame, confirmation for entry. Okay,
Yeah.
that's really all trading is. So again, you start with the high time frame, marking out high time frame key levels, and once we hit them, you want to see how we react on the lower time frame. That's as simple as possible.
Yeah.
Any other
All right.
questions?
No,
You
I'm good.
sure?
I'm sure.
Okay, so I would say, based on this, I would say wait for our next lesson, so lesson 4, before we
Yeah.
start with before you start with the demo trading. And
Yeah.
tomorrow I'm gonna be trading, so I want you to watch me as I'm trading live, so you can see how I'm doing it in front of your eyes. Okay,
Yeah.
very nice.
Perfect.
Let's go back to the Notion again. Anything else in here?
Yeah, I mean, I'm starting to understand. I mean, now for me, it's just I think a little bit about like when it comes to displacement or manipulation, when you mark out when you mark the line of the highs when the high gets swept, you don't know if it's displacement or manipulation until you wait, right?
Correct.
Yeah, all right. Then I'm set. Then I know, I understand.
Exactly. And then you just mentioned a good point. So regarding this is the easiest way to mess up. Like, how can I say? So yeah, you don't expect displacement or manipulation. You wait for it to occur. Again, we're not reacting. I mean, sorry, we're not predicting, as many people think traders do. We're reacting. Okay,
Yeah.
that's the main thing. So you want to wait and see. Is it manipulating? Then you can react in a certain way. Is it displacing? You can react in another way.
Yeah.
Okay? Yeah.
Oh, well, that should be all my confusions.
Very nice. I'm happy I cleared them up for you. Do you guys want to have access to the documents featured in the YouTube videos? Click the second link in the description to join our free Discord community where you will get access to the documents plus a variety of resources to help you on your trading journey.